Now, the International Monetary Fund, IMF, is warning the country's rising debt stock still remains a major threat to firmly stabilizing the economy. This is coming after the fund projected that Ghana will end the year with a debt-to-GDP ratio of 76.7% from the current 68%. That's according to a Sub-Saharan Africa Regional Economic Outlook released in Washington, D.C. Meanwhile, the latest data from the Bank of Ghana puts the total debt stock ending July at 263 billion cedis. Now, Ghana is currently classified as a high risk of debt distress country. As you may be aware, there's this rumor that the World Bank and IMF have declared Ghana a highly indebted poor country. But that is HIPC. But is that really the case? We're going to be speaking with an economist. First, let's hear from Information Minister Kojo Nkrumah, who has been rejecting the claim. He was speaking at the latest nation-building updates earlier today.
You'll notice that we focus heavily on the coastal regions plus the northern region, and we'll have an opportunity to speak to some of the major interventions that have been going on in these regions in the last 3.5 years. Before we commence these presentations, however, there is one quick matter that I need to deal with. If you have followed media discussions in the last 24 hours, you will notice a new trend showing up. There are suggestions being spread, particularly on social media, that Ghana has been declared HIPC again. I'm sure you would have noticed that a lot of persons are sharing material on social media that whether the IMF or the World Bank has declared Ghana HIPC or has listed Ghana as one of the HIPC countries. And it is a suggestion that the economy is not in as good a shape as we claim it is. For the avoidance of doubt, and because we have also mentioned that we are aware that some persons in the weeks ahead of the election will seek to spread a lot of false information and fake news, it is important to quickly respond to it right here and right now. Categorically, we say to you that it is not true that Ghana has been declared HIPC or has been added to a list of HIPC countries. The Highly Indebted Poor Countries Initiative, or the HIPC initiative, was a particular program that was rolled out by the international organizations, the World Bank, the IMF, and donor partners somewhere around 2001.
That was the Information Minister Kojo Nkrumah. Joining us for a quick conversation on the phone line is Economist Dr. Said Boakye on the concerns raised about the IMF. So we had the Information Minister there. We may not be in the category of HIPC, but our debt numbers are still worrying. You think the IMF is justified in its concerns about how our debt stock is rising? Hello, sir. Can you hear me, Dr. Said Boakye? Can you hear me, Dr. Said Boakye?
I can hear you.
Right. So how concerning is the fact that our country's debt is rising as the IMF has been expressing?
It is very concerning. And the concern is not because you have debt. The concern is due to the fact that repaying it is becoming a problem. So that is a concern. But I want to talk about the HIPC thing.
Right.
First of all, like the Information Minister said, the HIPC was brought late in the 1990s. Ghana entered into it. It's not IMF or World Bank that declares you that you are happy to come for it. You yourself do the assessment. They have their criteria. You do your assessment and see whether you want to go for it or not. Ghana went for it, and I don't think there's a second-round HIPC. And for that matter, Ghana does not qualify if even he wants to go for the debt relief. I don't think there's a second round. So that is it. If somebody says Ghana has been declared HIPC, IMF World Bank never declared a HIPC, but they have their criteria, and if you think that you meet the criteria, you apply for it. But getting back to the debt issue, yes, of course. One could argue that around 70s, the GDP, debt to GDP is not so much. But you should remember that the country's GDP has been rebased. It was rebased in 2010, it was rebased in 2018. So the GDP has been enlarged. And if your debt to GDP is so much, exceeding 70%, they mean that debt burden is strong. But I don't want to look at debt to GDP ratio. I want to look at debt service expenditure to a revenue ratio. for you repay your debt out of the revenue you have. And that looks quite ugly. And it is very concerning.
Right. We would have to leave the conversation here. We just scratched the surface. Would continue on this probably later in the day. Thanks very much, Dr. Said Boache, for joining us for this conversation.